Welcome to Finance 3320. In Notes 1, we'll discuss the basics of financial management. In this course, we'll talk about money, wealth, and accumulation of wealth. Our graduates are hired to accumulate wealth for company owners. The College of Business Administration exists to prepare our students for these professional management positions and for support areas such as accounting, analysis, marketing, and specialty areas such as entrepreneurship, banking, and professional golf management. This course is central to the objective of preparing folks to become business professionals. If one doesn't understand that they're being hired at $50,000 salary and that the company expects them to generate far more than that and benefit for the company, then they don't really understand the purpose of a College of Business Administration. Finance is pretty central to this. Finance is used to understand the use of money to accomplish individual business and public goals, mainly business goals. Finance describes investment, financial management, and financial markets and institutions. Investments is an area of finance dealing with the allocation of savings into financial assets such as stocks and bonds, real assets such as real estate, and we also talk about risk reduction through diversification. This involves spreading your wealth among many investments instead of placing all of your wealth in a single investment. Another area of finance is personal financial management, which involves the principles and theories of how individuals maximize utility or satisfaction level through decisions regarding consumption choices. This is very central to budgeting. A budget is a placement of planned expenditures. If your income is more than the budgeted expenditures, then you have savings possible. Once you have savings, you might want to invest it, so we talk about investments and personal financial management. And we also talk about risk reduction for individuals, similarly to how we talk about risk reduction for businesses. One risk reduction strategy that we talk about is the formation of a portfolio, a mix of two or more investments for the purpose of mitigating the risk associated with invested wealth. Again, which involves spreading your wealth across many investments instead of placing all of your wealth in a single or very few investments. Financial management involves managing a company in a financially responsible way. Businesses do basically two things. They raise money through the issue of securities and through borrowing, and they allocate that money toward investments in business assets. Government financial management mainly concerns raising of tax revenues and budgeting of those funds toward spending programs. Again, our focus in this course is on financial management or business finance, how to manage a company in a financially responsible way.